Hey, what's up, y'all? Good morning. This is your boy G Wiz. We on here. We are here and live with the bro Deon Russell, aka D Russ. And the brother's been teaching himself some stock investments and he's been learning from some other people and stuff, man. And he's really he's really starting to be that dude, right? So I asked the brother, I said, listen, man, I'm not asking you to jump on here as an expert, but as far as what you know so far in the stock investment world, as a black man, you know, becoming financially independent through stock investments and things like this. Hey, talk to the people, bro. Let's learn together. Let's grow together. So, first thing I'm gonna do is I'm gonna pull up a screen. He's on here now, but his camera's off. He can't run his camera right now, which is cool. But we're gonna look at a site that he recommends as as a site for us to check out, which is Forex Factory. Hey, D Russ, what up, bro?
What's going on with you?
Hey, bro, look. So we've been talking about stock investments for years. We talked about getting into options trades and getting into the foreign exchange market, and doing doing the cryptocurrency thing. Some years ago. First I want you to jump into a little bit about some of the financial hardships you ran into, business hardships you ran into, and why you jumped into the whole getting into the stock investment piece.
Oh man, failed business after failed business after failed business. Just trying to find my niche. I think we all get to the point where we don't want to be working for anybody, but that takes a lot of effort and courage to really go on your own. It's not as easy as you think it is. You was with me with my real estate journey, but I'm gonna be back to that. Trust me. Forex is gonna have me go back to that. So yeah, it's been a lot trying to get to the journey and how I was introduced to even stock market. I had people like just planting seeds on me. My thinking as a black man was like, I can't read those charts. When you look at the candlesticks on the charts and all this, where people look at from a far distance like scribble, I'm like, man, I don't know what I'm looking at. You know what I mean? And different people would just come to me like, oh, join this group, join that group, and I would just throw it by the wayside. One day, I was talking to my cousin Erica. She was like, "Yeah, I made um, $800 this week in options," and I was like, "Huh?" Because I heard buying whole stock, but I said options. I never heard that term before, and she pretty much was like, "Yeah, I had $200 invested." So I said, "Okay." So for some reason, I don't know why, but what intrigued me was I said, "You can lose all your money." She said, "No, you don't. You could place a stop loss so you can determine how much you're willing to risk and lose." When I heard that, I was like, wow. A lot of people are just uneducated about, stocks. So I thought you could lose your money. So I'm like, okay. So my next step I did was I went to YouTube University, free game. Sometimes you don't have to even pay for a course and get a mentor. I mean, sometimes you do, but a lot of that stuff they teach you, you go right to YouTube and learn it. So I went to YouTube and I found my first person I looked up was like I ran into Kelly OG, and ever since there I just fell in love with the candlesticks, man. I mean, I was not looking for this. It was kind of put on my plate, and I fell in love with the candlesticks, and ever since then, man, I've been very diligent, like spending like 8 to 10 hours a day, just trying to understand, the market. And when I first started off,
So let me
I,
let me let me let me stop you real quick and ask you a question with that, because statistically, they say 90% of people who quote unquote invest fail.
right.
How important is it for you to get the knowledge of the stock market before you actually begin to invest? That's the first question. And then what are some good strategies on learning? Because some people have a very hard time, you know, learning. You know what I'm saying?
Okay, so don't get mad if I ask you to say the question over again because I'm gonna ask one of them. So the first question you asked was basically, what did you say again? I'm gonna answer the first question.
The first question is, how important is it for you to gain that knowledge of the market
Oh,
before you
that's
invest, or should people just jump right in?
no, that's very important because one thing that when I was watching Kelly at the time, she was saying that value the education, and all we're hearing was like value the education. As bad as I wanted to get in, if you don't get the education, you are going to jump in that market and you are going to get slaughtered. And a lot of times people want to go on Instagram, they see Forex traders with Lamborghinis and all that. And that right there will mess up your psyche depending on the person that you are. You think, oh, I can get a Lambo in a day. And they showing you these Lambos, but what they ain't showing you was when they was at level 1. They on level 10 now, but they ain't showing you when they was at level 1. And it's very hard in the beginning. Some people take about maybe a couple years, 3 years, 4 years. I didn't seen up to 8 years, you know. But it just depends on your mentor. How do you look at the markets? What do you see when you're in the markets? Because that determines everything. Because I was doing it for 6 months and I had to dispose everything that I've learned. I had to learn again when I got to my mentor. So education is very key to learning it. And here's the thing: you're not going to get it in a day, but it will start registering. What I explain the stock market is like the Tamiya dance, and we know everybody gonna get that dance, and we know that's hard, right? But when you first start off with that dance, you get the first 2 steps, right? You practice them, okay. You got that. Let's add on a couple more steps. Boom. Then you're halfway through the dance. You just keep learning and you start killing it until you get the dance down. Now you got the dance down. Now you want to put a little bit of oomph in the dance. And then you get the dance. It's the same thing with the stock market, as I explained, you know?
Yeah.
So what
So
was
so talking about the dance, right?
right,
So you're talking about the steps to the dance. If you want to learn how to tango,
right,
mamba, let's talk about those steps, man, in this dance, right?
right,
Because there's a few different dances in the trading world.
right.
You know what I mean? So let's talk about a few of the different dances. Let's talk about you know trading on the foreign exchange market, or the forex trading, options trading, different
Okay, got
things.
you.
Let's talk about what are some steps you took to gain the understanding, and knowledge of these markets, and then furthermore, the steps that you've taken to not only understand the market but understand how to jump, getting in that market and starting to actually trade in that market.
Okay, so I went through major hurdles. Right now, I won't say that I'm a full Forex trader. I trade on a Forex broker, but I trade indices. When I first started, I was trading options. And there was, and it's not against anybody who's trading options because you could definitely make money doing it. But what the pros and the cons of options was that I did not like the Greeks. Now, the Greeks consist of theta, gamma, rhea, Vegas, and there's a lot of things that can affect the contract that you buy, you know? And when you buy an option, depending if you buy in the money or out the money, and those are for later conversation, but as you get further to your expiration, there's a time decay on that contract, you know. And then the fact that the markets open up at 9:30, so you got an 8 hour window to trade and make your money. And say if your move don't happen till after lunch, so you should, I think you pretty much got to be a swinger or a scalper, to really hold this position. A scalper is just somebody who's in and out of market within like no more than an hour, or and the swinger is just somebody who's holding it overnight, and I don't really like to swing because the market is volatile. But there was a lot of reasons why I personally didn't subscribe to options. um Now, trading indices, there's a lot of freedom in that, because they're very volatile. They're open about 5 days a week. It closes at around 5:30, 6 o'clock Friday, and it reopens about 6, 7 o'clock Sunday evening. So that's a lot of good things that we got going on about that market in particular. Um, I had a cousin who recently called me like last week, and he was trading options. He was like, "Cuz I learned, I lost $2,200," and I'm like, "Why did you lose $2,200?" He was like, "Cause it hit the trend line. It gotta go down. It gotta go. It gotta go. It gotta bounce up." Cause it. I said, "Bruh," I said, "For one, the way you look at the markets is how I used to look at them." I said, "You are mistakenly mad." I said, "The markets can do anything that they want to do at any time." So he said, "Well, if they do anything at any time, how can you guess the market? Because the markets are there's an algorithm to the market. If you ask me the way I look at the markets, I feel like they're rigged. They are rigged and they are manipulated, and I got proof. They're rigged and they're manipulated, and I personally don't subscribe to buying and selling pressure. I believe that the central banks, or what I call them, the market makers, are going to push price to a specific place at a specific time, but it's an algorithm how they do it. So when I trade, my biggest thing is what time is it and where is price at? Is it taking liquidity or is it not taking liquidity? There's a lot of things that you got to understand about that market. And once you understand that algorithm, bro, I promise you, it's like printing money, but you got to use proper risk management. And my cuz didn't have no risk management. He's just saying, oh, I got to do this, I got to do that. And a lot of us, we're retail traders, but we shouldn't trade retail logic because the algorithm is
Hold
always
up,
looking for.
hold up. You dropping jewels. You gotta unpack these jewels, bro.
Okay,
We
okay,
retail traders, but we
retail trade.
shouldn't trade retail logic. You gotta freeze on that one. You gotta unpack that.
Okay, when you look at a chart, there's a red and green candlesticks, and sometimes they're small, sometimes they're huge. Me and you, even these little banks, don't got enough money to make those candlesticks move. But these central banks are spending in the forex market. There's over more than $3 trillion spent a day. We're talking about central banks spending trillions and trillions of dollars to make these prices move. So you want to trade with smart money because they're smart and they know where prices is going at what time. And this thing repeats itself every day. When and that's the logic. So we're retail traders, but that means we don't have the money to push the candlesticks, but we don't trade retail logic. We want to trade with smart money because if you're trading every time, oh, it's a stop. I don't even trade those patterns. Let me tell y'all something. When people be like, oh, it's a head and shoulder, it's a head and shoulder, it's a bull flag, it's a bull flag. I would drop those methods real quick because people are profitable with them, but if you actually knew how smart money was moving, you would be better. I use no indicators on my charts whatsoever. So, all right, so we're looking at the chart right there. He got the chart up right there. So you're looking at that green candle. So say if that's a daily candle right there. Market works in manipulation, right? So on the green candle, what happens is it opens up at the bottom, it manipulates at the low, then it goes up for the high of the day, then it comes back and close. Now I'm going to explain that move on that green candle. 12 o'clock, I was told by my mentor and studied it, back tested it, it's true, found to be true, is where you want to put your daily open. Now, if you're on TradingView, where it says open, that's probably 6 o'clock. So I want to say 12 o'clock midnight open is between the open and the low. But smart money, big hedge funds, if you're an intraday trader, means you're trading throughout the day, holding your position through the day. If they are bullish, they are going to put their position below the 12 o'clock midnight opening price. I did it for the last couple of weeks and haven't lost yet. So it comes down, and most retail traders think, oh, it's going down. It's going down. It's going down. But what it does is it goes down a little bit, it wicks down, and it goes up to the opposite direction. And vice versa on the red candle. And you see the open of the candle right there. That's where it open, but it goes up, it makes that wick, and then it goes down. So if I want to be selling for the day, I want to make sure that I'm selling above the 12 o'clock open price. And selling above, selling my position from above, and anticipating that it's going to go down based on my daily bias and weekly bias. So you have to go into these charts with the daily bias. And one thing that I used to struggle with was I used to go into these charts and I go on a 15-minute, like I'm a scalper, I don't need to know what price is. So when it bounce off an order block, I'd be like, why is it not obeying that? Because you have to know where you're at on a higher time frame at all times. How are you going to buy in the 4-hour supply zone? So there's a lot of education behind this. And one thing that my mentor always told me was, if you do not have a daily bias on what price is going to go, you are purely gambling. Because I had stopped. I got one point got so rough. I stopped trading for a month. I was like, I just gotta see why am I not? Why is it not clicking? That was one of the biggest pieces to the puzzle. And I was like, well, how do I get my daily buys? Then I learned that sometimes your daily buys gonna be wrong, but you always trade what you see. So if I see when I see a daily buys and I go in for a trade, if I don't see like a reversal at that a specific level, or an old high, or a fair value gap, or if it don't turn around with displacement, meaning that it's an energetic move to the other side and it comes back and taps into a fair value gap, then I don't take the trade. So that's not confirmations. So I have defenses in place so that I don't take a losing trade, even though I have a bias. So my bias, I might have a bias, but I trade what I see. So what I see is against my bias, but then guess what? I'm wrong, and I'm gonna go with that.
So you use the phrase bullish versus bearish.
Okay,
You know,
bullish
a lot of
means
people don't understand what bullish versus bearish means.
okay, gotcha. Bullish means that you're anticipating the market's going up, and bearish is basically going down. I'm not gonna complicate it. A green candle bullish, red candle bearish. The bears, you know, just right there, exactly, right there. That's a perfect example right there. And that's all it is. Slow terms. Don't overcomplicate it, people. I think sometimes trading can be overcomplicated, but like I said, it depends on who you learn from. So people use a lot of patterns like head and shoulders and bull flags and all that. And now that I don't use indicators, I'm like, oh, all the head and shoulders is basically it coming down, taking liquidity, going back up and coming back and bouncing to a fair value gap and shooting it to the other direction. It's a reversal pattern, but people look at it from a retail standpoint, And if you guys are out there, and I'm a certain, and I know some of you guys out there, y'all make money trading patterns and all that, and supporting resistance and all that. Okay, so right there we have up there, we got a uptrend. We got a higher high, higher low, higher high, higher low, higher high, higher low. So that would be a bullish move. And then you got bearishes, lower low, lower high, lower low, lower high, lower low. But you see every time that is moving down, that is breaking that structure. So until it breaks that support level that they would call it, um, it would not be a lower low until it breaks that. So these are real
You
easy
know,
patterns, and people think like, oh, this is easy, it's higher, 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 low. But no, it's way more to the market than this. Because
right.
the question is this forming on a day chart? Because you got to understand, there's a day chart, 4 hour candles, 1 hour. You got to understand when you drop down from a day, and then you got a 4 hour chart. You got to understand there's 6 candles that make 1 day candle, and then there's 24 day at 1 hour candles that make a day candle. So you keep those screens next to you, so you start looking how the market's breaking down, so you can see it more clearly. But you always one rule is that the higher time frame got precedence over any other lower time frame. That's like your bigger brother. I'm older than all you siblings. Y'all gonna do what I say because I'm older. I got knowledge. I know what I'm doing, and y'all are just mimicking the move that I'm doing. You might not get there yet, but you eventually will get aligned to what I'm doing. So that's where a
Mhm.
lot of traders get trapped at. They go to lower time frames and they see patterns on the lower time frame and they lose because they don't know where they at on the higher time frame.
When I first started trying to trade, I kept losing. It was frustrating me because I was looking at the 1 minute, five
No,
minute, and 30, 10, 10, 30 minute charts. And I'm looking at the candlesticks like, yo, I've been studying these Japanese candlesticks, and
no,
I see it trending, but just like you're talking about, you have to understand that even the 1 minute charts, the 5 minute charts, the 30 minute charts, the 1 hour charts, the 4 hour charts, even the daily charts, they're all affected by longer time frames. You have
right,
to look at how that stock traded over the last year.
right.
Sometimes you have to look at how that stock traded over the past 5 years because you got to see, what direction that business has been going in for the past X amount of years.
Yeah, I usually glance at the monthly. I glance at it, see if there's any fair value gaps because usually a monthly don't like to leave fair value gaps. Um, a fair value gap basically is when the candles do not wick or close behind each other and it leaves a gap in the market. So we call that it's inefficient. So like if you were painting a room and you're putting on one coat and you go down and you start painting the other rest of the room, well, you're going to have to go back to that same area and put another coat on it because that one coat is not going to get it. It doesn't have the right amount of paint on there. So it's the same thing with a fair value gap. That's the key. I think that's the key to my trading, because at these particular point of interest, the market does reacts a certain way, and I know the way that it reacts. So I take a lot of trades coming from the fair value gap. So, but I understand what you mean, because even if someone like at a order block, so order block is like, to me, is the last series of candle, the last candle opposite of the move before it takes an energetic move. And the 1 minute, the 1 minute is too noisy. I don't like taking trades on the 1 minute. I think my sweet spot is like a 4 minute chart. My sweet spot is a 4 minute, but I will consider a 1 minute chart if I'm in a supply or demand zone, because I know if I got my daily buys that what it's going to do from that area. Then I want to see the change of character. So if you could put the change of character up on the screen, we could talk about that a little bit, because it's a change of price delivery basically, and a market structure shift, aka.
I'm gonna pull up a fair value gap. Um,
Okay.
um, a fair value gap example.
Okay, right there. So you see prices breaking structure going down, and you see right there when you look at that gap, there is no candles behind it, no wicks or no nothing. So that leaves an inefficiency. So what it does is price usually wants to go back, and it doesn't have that. And this is where a lot of traders get wrong. They're like, oh, it got to go back there, but the question is when. You don't know when. So you would set an alert there depending on your bias, and you be like, all right, when it gets here, I want to see it act a certain way depending on my bias or the direction where price is going, and then I'll take a trade from there. And if you look up from that fair value gap, you got that green, you got an order block. And when I say order block, it's that last bullish green candle at the top before the move went down. That's where usually where all the hedge funds or central banks are hedging their moves. So they're right before the move, and then you see how it goes down and it takes out. I don't even know the price time, but I bet you where it's consolidating, that's probably Asian, and it took out that Asian low, and boom, and it was energetic move. We call that displacement, and it goes down. Yeah, it goes down. It goes down. So if price comes back, it could bounce off that fair value gap. But say if this pattern right here was on like a day chart, right? I wouldn't take it off the day chart. See, I want to drop down to like a 15 minute, a 5 minute, a 4 minute, and see where my entries are. You know what I mean? Or reverse at that fair value gap. But if I don't see a change of character there, which we'll get into next, I don't take the trade, because it could dang well go up to that green order block up top and then bounce from there. But also this premium and demand zones mean 50% of equilibrium. So what you would do is take a Fibonacci from that green order block up the top to the bottom of that move. And if the price comes back, I can tell you right now that that fair value gap is above the equal 50% equilibrium. So I can tell you right there that that will be a good place to buy, because usually if price is coming all the way back up to that order block, it might just react to it and to keep going higher. So you really want to. So I think that fair value gap is a great place to take the trade, but you have to see a change in character on a lower time frame, in order to have confirmation. That's what I say about, like, I can have a bias, but I need to see it react at a certain level, a certain way.
So just to let y'all know, y'all gonna have more time with Deon Russell to actually break down some of the phrases y'all are hearing. You hear him use words like Fibonacci, right? You hear him. So you'll hear some terminology in trading that you actually kind of you really want to know, because these are things that you're going to hear consistently, like bouncing, right? You know, you know, there you'll hear a bunch of different phrases that he uses throughout the conversations that we have, that you definitely want to be knowledgeable of, because that's going to help you, um in understanding the lessons that are being taught.
And I know a lot of people be like, well, I don't got money to start, man. I started my Forex account with $100. No, actually 1,000. But you can start it with $100, you know. But I wouldn't suggest you guys go throw live money in there. I would say paper trade until you get comfortable. Because there's another part of trading that people don't talk about either, and it's psychology. How are you going to feel when you know where price is going to go to your direction, and you got confidence, but you're in drawdown. And drawdown just basically means like the money, the profit and loss, what your loss is before it hits your stop loss. So before you get to your target, it might retrace a little bit, or you might have started off and draw down, and you're negative. You're just negative for that time being. But if it's your stop loss and it takes you out the trade, and no trader is 100% winner. And for the last couple of weeks, I haven't lost a trade in 2 weeks, but I'm anticipating to lose one. But it's okay because my risk management is crazy. Like the other day, I had a trade that was like a 39-1 risk rate, the ratio.
Nice. So for beginner traders, somebody who might have been looking at the market, um, reading some books, YouTube University in it, as you said, where would you say would be their safest approach or their safest first investment, or if they want to get into stock trading and putting some type of money on the line?
I would go to Forex. Now I know you guys hear a lot about Forex because there's companies like IML out there trying to, they are no longer. They start these little pyramid schemes, and these guys don't know how to trade, and they say we'll teach you trading, but just sign up other people and sign up other people. No, you want to stay away from those companies and people who do that. Forex is not a scam. I just want to put that out there, but you still have to be careful in this space, But as a beginner, you want to first of all you want to get a regulated broker. My broker is unregulated because I know how to navigate. I know what I'm doing. I could risk a lot more with an unregulated broker, but I also got a safety net in case something go wrong. But I'm telling you guys, as a beginner, you want to get a regulated broker. You might want to do futures with TD Ameritrade. Use them, sway markets. You just have to do your research on your broker. You know what I'm saying? They got broker, they got regulated brokers on TradingView is the platform that I use to market my charts. Oanda, such and such. But I would say start with Forex because when you're trading options, like you got to pretty much leverage your own money. And with Forex, a lot of brokers are giving you like 500 to one leverage, so you ain't got to put up a lot of your own money, but you can make a lot if you know what you're doing. So I would start there. But honestly, before you throw any money into the market, never risk what you're not willing to lose. If you feel some type of way you lost some money, you're risking too much. If your feelings is involved, and sometimes you got to get over that part because I had to work on that. I be in the trade, I'm like, oh, we down. Oh, let me pull out. We down, and not giving the trade room, trade enough to breathe. You'll have to get over that. It's part of the growing process of the psychology of the growing process. So you guys, I would honestly say, please, please, I'm begging you, don't use your rent money. Don't use your bill money. Start off with paper trading until you get comfortable, because that's just level one. And then when you get good at that, then you're gonna have to go into we're gonna talk about that right there. Then when we get to level two, you're gonna have to use live funds and see how your emotions are when you're in drawdown. How do you feel? Journal. You'll need a journal. How did it make you feel? Was your heart racing? You didn't care? You'll know you're there when you could be in drawdown, and even if you're wrong, you're just wrong. It is what it is. You skip on, move on, get to the next trade. That's how you know you're growing as a trader. So yeah, I would start there. Okay.
Cool. So I had to pull up one of your trades.
Right.
Some people might not understand what they're looking at. So
Okay.
I watch you post your trades all the time, man, and I don't think people understand what kind of a power move this was.
That was a dangerous power move. I'm gonna be honest. Audience. If I probably would do it because I'm a little bit know what I'm doing. But if that would have went against me right there, that move, there wasn't a stop loss that could have ever stopped my account from getting ravaged. But I seen the signs of what the market was going to do. So that red up there, you might not see because I would take it from my phone. That was a 4-hour order block, aka supply zone. And what I seen was when I got to that area that it was breaking down, like it was breaking. It was creating lower low, lower highs, lower lows, lower highs, lower lows, and when it did this, and when it did the second retest at that level, because we was in the supply zone, I got into the trade up top. Now I knew moves was coming, but I already took half of my position off, because when you're winning, you don't want to give no money back to the market. You want to actually take some money off. You know, you want to take some money off. You really want to take some money off and secure your profits, because you don't know what's going to happen. And that yellow line down there, that represents the 12 o'clock opening price. And I was bearish on the day. So what did I say earlier on the podcast? If you are bearish, meaning that you think price is going to go down, you want to sell above 12 o'clock midnight price. And you see, I didn't get in until it started breaking down, because before we did that, you see it's making higher highs, higher lows, higher highs, higher lows, until it gets to that 4 hour order block, right? You see that, G-Wez? And then it breaks down. You see it start breaking down? That's where I took my trade, because I knew that we had to change the character, which means a change of delivery. And that long red candle right there, let me tell you, it only took a minute to make that candle. That was news. That was news.
I
That
don't
was,
think y'all understand what this red candle is saying, y'all. Y'all see this? Yo,
I
this
made
candle,
some money
this
on it.
candle right here is the one he's talking about. This red line
Right.
right here. So this is candles like this.
Generally
People
on
could
the move.
people commit suicide over candles like this by not knowing how to trade.
Right.
So drops like this. You see right here. You can see my cursor moving, right?
Right.
So this is classic idea of how people get caught with an okie doke, right?
Right.
If you think, okay, it's moving upward, we good, right? We pushing, we bulling, right?
Right.
And you like,
So,
all right, I'm gonna get in. I'm gonna get in. It look like the market's gonna keep going up.
right.
I'm gonna get in because I know it's gonna make all this bread. You buy, you know, you buy it, thinking that it's gonna keep going up, 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 and then you not pay attention to it, or you step away from it for a while, and you not watch, especially if you're day trading. You're
Right.
not you're not paying attention to it, and then it drops like this.
But there was a series. If you zoom in on, there was a series of lower highs, lower lows before it dropped. Now, another confirmation that I had, because I'll go about my 6 confirmations before I take a trade, right? So that blue line up there, that was, I want to say that was Thursday's high. So what the market likes to do with the big money, the smart money, the central banks, they like to take that liquidity and get all those buy stops right there. Those, yeah, but I think sell stops. They want to get all those stops out there, right? They want to get those buy stops, actually, because that's buy side liquidity. They want to grab those, stop you out, and then go in the market. When I seen that, and then I seen it start breaking down, and I was in the 4 hour supply zone, and it took Asian high, bro. I was like, oh, okay. So it went down, it went back up, it went down again, and when it went back up and traded into that fair value I got it right there, because it was obviously what the market wanted to do. And once it went below that and that candle happened very fast. And once it went below, like right there, out of that supply zone, I took like 25% of my profit off. And I waited for news. Now here's the crazy part about this that y'all didn't see. That candle dropped. So my mentor teaches us about the power three. Power three means accumulation, manipulation, and distribution. What you seeing right there before that drop down was accumulating of orders. And they usually do that through the Asian session, which you don't see a little bit. It accumulates orders, and then it dropped during I want to say the New York. It was still kind of like London session a little bit. It dropped, but when that market opened, what that candle did down there wasn't even justice what the market did. It moved 1,000 pips the other way, because that candle dropping down was the manipulation phase. And then when the 9:30 bell opened, what it did was it went up, it came back down, it broke, changed the character, broke structure. It came back. I could have got in and rode the market up and made more money. and it went right back up, and it surpassed where it dropped at the daily high, and it flew up even further than what that candle dropped down. That was a great day. A lot of people made money that day if you knew what you were doing. And right there, that's the SPX I trade 500, which is the 500 top U.S. companies. So you know that's going to be volatile. Then you have the net, and the other two pairs I trade is the Nasdaq 100, and then the US 30, which is the 30 top the 30 top companies and the 100 top companies. So all right, we're looking at that one right there. So right there, once again, I had thoughts that we were going to be bearish. What did we see there? We see below that. I'm trying to see if that's the same candle from the same day. Yeah, same thing right there, just on a different chart. I think this is the same. I think this is the same. No, because that was dropped. Yeah, it was a different day. So I had conviction that we were going to be bearish. So right there, we got the yellow line. That's my midnight opening price. Bang. That red box, it shows that we're in a order block, a supply zone. I don't pretty much remember what time frame we're on, but I think we're on a higher time frame because I get all those on my higher time frames when you go up to there. But you see the change in delivery as you go up into that supply zone. Look how it changes. It starts breaking down. So when it starts breaking down, once it broke down, I was able to get in on the fair value gap and ride that all the way down. Now, the orange line on the bottom, that represents the Asian low session. And once it broke down and hit that green, and that's pretty much I think that was a volume imbalance. A volume imbalance is when two candles wicks touch each other, but the bodies of the candles don't close. So that was my I took profit there. But when it went back up, it came back down, and then it went up again. I got out the position because that right there shows you that it wants to go back up. I could be wrong, and sometimes I'm all right with being wrong. I don't know everything all the time, but based on how I know the algorithm, how it moves. Now, you see how that moving up, bro? How it moving up all fast? I would want that to come back down and retest it to that fair value gap before shooting back up again, taking out that high. We call this a Judas swing. Now, we got a London session, which in my eyes is from about 2 o'clock in the morning, no, 3:30 in the morning to 11:30 in the New York session. New York session is 9:30 open to about 4:30. But when you're trading forex, we use the 8:30 open. And what it did was it wanted to do a Judas swing right there. So I got out of my position, but I also, if it came back to retest that level, I could have made some money go up. But the thing is, the trend is your friend. You want to ride the trend. You shouldn't do opposite trades unless you know what you're doing. And I know where my take profit levels is. I know where my defenses is. I got like a whole defense system in case prices go totally against me. You know what I'm saying? It was not easy. It was not learned. And here's the kicker, guys. I'm dropping all these jewels. And guess how long I've been trading? It's only been 9 months. Only been trading 9 months. And to be honest with you guys, you still hear me, bro?
Yeah, yeah. I
Bro, you
was
still hear me?
yeah, I was just muted.
Okay. And, yeah, and to be honest with you guys, sometimes it takes people 2 to 3 years to do what they do, or 8 years. It just depends who your teacher is. Now I'm gonna give them some jewels. I'm dropping some jewels. I'm gonna tell you my teacher is the one and only Michael J. Huddington. Shout out to Michael J. Huddington. He was talking about the things that was going on in Israel, from a biblical standpoint. You know, Michael J. Huddington, known as ICT, which represents the inner circle trader. Sound like a secret society, all the answers trust. He's not one of them guys that are flashy out there, on Instagram riding in Lamborghinis and all that. He tells us traders to avoid all that. He said don't listen to that noise. Be good at what you do first, and then enjoy the fruits of your labor. A lot of people get wrecked because they go on there, they see their favorite YouTube, and favorite social media guy. One of my friends, he was just in a trade the other day. He made $450,000 in one trade. Okay, so right there, we're looking right there. So okay, those little dotted lines was basically me trying to get price, see where price is going on my alerts. So right there, you see it broke down, but the orange line is Asian range. When I look for my trades, I usually like to take the Asian. I look at the grabbing of liquidity from the Asian range. The Asian range is known to consolidate, so I will call that the accumulation phase. It's accumulating orders. But what happens was it goes down into that down there where you see that gray. That's a fair value gap. It bounces off the fair value gap, but I don't even. I think I tried to take the trade going up, but guess what? It moved up so fast, I didn't even have a chance to get in. So it stopped me from getting in there. But what happens once it gets up and takes that liquidity from the Asian session? It starts breaking down. Now, if you move your cursor, Wiz, if you look up at the top, start up at the top, what it does, it goes down, right? It goes down. It taps back up into there, right? That left for that candle, go left a little bit. Right there, right a little bit, right where that red candle is, right where that gap is. That's a fair value gap. So it goes down, it taps into that, right? But I don't take that one, right? Because it didn't break that low down there. But as it took that fair value gap, it broke that low. So I said, okay, that's confirmation that we're going down. So what happens? The other one goes back up, it taps into that fair value gap again for the second time. Boom. I take my trade from right there. Why? Because we're above midnight opening price and we took Asians high, and we're also in the supply zone. I ride that down all the way past that fair value gap down there. And as we hit that low right there, I take my first profit. Then I go down to the next low. I take my next profit right there. Then I got runners for the rest of the day. Look how the price just melts. So let's go up there. So let's look up. Let's look up. So that's so I took the trade at 43.14, right? Bang. Now let's drop down. 43.14. Now let's drop down to the bottom where it was running, where I pretty much probably got out at. 43.14 to 89. 89, 99. Oh, 09. That right there pretty much, depending on your lot sizes. Now, lot sizes, that's another topic. There's standard, there's mini, there's micros. If you're starting off, please do not use more than a micro till you get acclimated on what price is doing. Standard is for the big boys now. Now, I think on this one, I was a one standard. So this was like a $2,500 move right there. And that was in a matter of an hour. Because everything has to do price and time. What time is it? Where's price doing? You get what I'm saying, Wes? Price and time is everything. Everything has to do with price and time. And that was right there about 2,300 pips move. That's a lot of pips, my dude. It's a lot of pips. That's a lot of pips. That's a lot of pips. Price just melts. But I learned this way just back testing. Back testing is taking a chart on trading view, learning and seeing how price moves from previous days, months, or years. See how price reacts to get acclimated with that particular pair. And price just melts right there. Now, I ain't gonna lie. I think I might have had a bias on the price going up bullish. But guess what? My defense mechanism wasn't in, and I changed my bias because first of all, I seen how fast it ran up to take the Asian high, and then how it started breaking down like that, and then it was in the supply zone. I said, "Oh, we not bullish. We were short term bullish, but we're definitely bearish." And when I seen the signs, they're like, "These are all the signs." Would you go even though you feel like you're going to a place and it says "Do not enter"? Like this is the place right here. Would you still go where a sign driving the car says "Do not enter"? So I didn't enter. But I changed my bias, And I said, price is showing me something else. So not let me not trade what I think. Let me trade what I see. Pure price action. You don't see no VWAP, no EMAs, no Bollinger Bands. Pure price action. That's the best thing in my opinion that you can trade. You don't want your chart clouded with those things. Now, right there, those are my levels. Right there, I don't know what I was trading that day. That was on my computer. That wasn't on my phone. But that green and that shaded area up top, that is my Fibonacci level. That green is the equilibrium. So if I'm below the green, and depending on my buys, I want to take a buy. If I'm above that green, I'm in a premium. I want to take a sale. I don't want to be buying above there. Now, from what I'm looking right here is different levels right there. So I'm thinking that I was entering in to a buy. I was just waiting for it to retest down there, or maybe I got on lower time frame based on my levels, my green levels. But you see that shaded red area above there, but that would have probably been my target with that fair value gap above where it's red outlined with the gray shaded. That would have been my fair value gap, and that'd have been one of my targets, short term to see where price wanted to go to. Plus, it would have been a good target to get out because what it does is it takes that Asian. Let me see. Yeah, that's Asian range. But you guys consolidating, bro. So I'm gonna tell you what's happening right here is the power three. But where that green is at is the Asian session. So it's consolidating orders, right? It has a fake move down. It takes the liquidity from Asian range, right? I could get in the move short term, going up, taking all that liquidity to that fair value gap. And that part is manipulation. And then it goes to distribution and it goes down. It takes out all the lows. Make sense? Power three. Accumulation, manipulation is the move going up. Like right now to that, it's going up to that gray box. It probably go a little bit further. The distribution is what we ain't seen yet. But I would get ready for the distribution knowing that that's the power three. Accumulation, manipulation, and distribution. Simple. It's not at first, but it does become simple.
Yo, we jumped on here with D Russ, man. Hey, close us out, bro. We're gonna close out the session, man, and then we'll do another one another time, bro. The market, anybody who's actually trading in the U.S. stock market, the market's opening in about 15 minutes.
But
Uh,
hold up, but don't trade today. It's gonna be a bad day in the markets. It's Columbus Day. There's no volatility in there. You just gonna be part of the accumulation phase, and the central bank's gonna hit you tomorrow. Don't trade today. Stay out of the market. No, it's correction. It's Indignious Day. So don't trade today. It's a national holiday. You'll get ate up. You're not gonna get no money. Okay. You know it's facts though.
yes.
I forgot it was too. I was ready. Look, I was a Saturday like, oh, ready to eat these markets up on Monday, and then like, oh, it's a holiday, man. I don't care about no holiday, especially Columbus Day. Or
Yeah, you don't want to do that.
yeah, so I gotta wait till tomorrow and
Make
trade.
sure make sure y'all tap in to Deon Russell's social media channels. He always posts his trades. He posts some nuggets, golden nuggets every now and again on his channel.
I'm waiting for that losing one, man. I'm gonna put. I like to be transparent and post my losing trade, so I'm waiting on the losing trade to post. It just hasn't happened yet because before I enter a trade, before I close this out, before I enter a trade, this is the six things I look for, and I'm gonna explain them. I'm looking to see where the midnight price is opening at. First of all, my daily bias, where my midnight price is opening at, where my Asian highs and lows are, my my breaking structure or change of character, um, a trade back into a fair value gap. Those are the five things I need to see. I know there's a sixth one, but I forget what the sixth one is. Oh, displacement. Displacement. That's the biggest thing. I have to see my trade displace and leave a fair value gap. If it's not an energetic move, I won't leave a fair value gap. I want to see displacement. Those are the six things I have to see before I enter a trade. and that's why I probably haven't lost one in the last 10 days. But I'm not gonna get cocky. I'm just a little confident because you don't know what I've been through, man. It's been a long time coming in these last 9 months of getting stuff wrong to getting it. So those are the 6 things I need to see before I enter a trade. And all my trades are high probability setups. They're not low.
All right, let us know how people can tap in with you, bro. Follow you, bro. You know what I mean? Connect with you and all of this stuff before we shut it down.
On my Instagram is D Russell, I think underscore 1626 or 1616. Um, I don't do much on my Instagram, but I try to post my charts daily on on Facebook. We're going I just probably need a couple few months for a few more months. We're probably going to end up opening up a group um with education and everything. So right now, if you just follow the journey, you know what I mean. I think I got a series coming out on YouTube that I'll probably drop like 5,000 to $1 million. I want people to see the journey. How we can get there with proper risk management, and look at what my psychology was when I was taking the trade, what I seen, what I looked at, and why I entered the trade. So we're going to be working on that too as well. You got to crawl before you walk. It don't just happen overnight, because there are some things that's coming with this with the economy that people aren't ready for. So you're gonna have to learn something. AI is taking over a lot of stuff. So I really believe like God gave me this. You know what I mean? And I just want to honor Him back. And I did pray. I was like, God, if you just give me this, man. As much as I don't want to teach people, man, I'll serve you and I'll teach people this. So you know what I mean. So it ain't just for me. It's for the seeing the succession of others.
All right, y'all heard it here. So brothers willing to, give knowledge, man. People charge tens of thousands of dollars for this information. I mean, just for what y'all got today. I mean, that was a lot of information packed in today, y'all. So you'll see more stuff going forward. Um, make sure you tap into WXC Empower, the YouTube channel. You'll see D Russ on there teaching, and you know what I mean, the Facebook channel and everything, man. So tap in. Make sure y'all are ready. And it might be dope one of these days, bro, when you able to actually sit down and during some live trades, man. Pull the screen up while you live trade. You feel me?
Yeah, very soon, bro. Very soon.
Let
Very
the
soon.
brothers tap in with you. You feel me?
Right.
All
Got you.
right. Y'all take it easy. Y'all on here live with G Wiz and D Russ. And we talking money, man. We talking investment. All right.
All right.